Good morning. This is Larry McMillan with a market update on Monday, September 28th, before the market opens. So last week we saw the S&P chart break down below what had been support at 3280, and that turned the chart negative. It's still negative. It has a pattern of lower highs and lower lows, and as long as that's the case, the S&P chart is on the bearish side. There is resistance at 33.30, which is about where we're going to open this morning because a pretty strong rally is underway over the last couple of days. But the major resistance is 34.25. That's really what will turn things now back from bearish to bullish. The most recent rally has been about a 130 point rally off the 3200 level, so that's support. And that's happened in, well, mostly outside of New York Stock Exchange trading hours, but it also included Friday's trading. And then below that, the 200-day moving average is at about 3,100. The equity-only put-call ratios remain strongly on sell signals. They continue to rise out of what were very overbought conditions. Still pretty overbought. There's still a lot of call buying going on, especially on rallies like the one we're going to see this morning. Breadth has improved, and the breadth oscillators reached a very oversold state at the middle of last week, and now they're on the verge of buy signal. So that would be our first confirmed new buy signal, and that would take place today if breadth is positive. It's going to start out very positive. We'll see if we can hold it throughout the rest of the day. We had been watching new highs versus new lows as a potential sell signal, but that never occurred. New lows crept above new highs, but not by enough to give us the sell signal we were looking for. VIX has been, well, interesting, let's say. VIX continues to be dominated somewhat by the bubble in implied volatility that's taking place in SPX options expiring after the election. But having said that, VIX has not rallied while the market's been declining here. So we never got that stop out situation of VIX rising 3 points in 3 days. Meanwhile, now VIX has dropped back below its 200-day moving average, and it's also the 20-day moving average of VIX is below the 200-day, so that's actually bullish. So VIX is painting a somewhat bullish picture. I realize there is that distortion in there from the post-election options, but basically VIX has been trending down all through September while the market's been trending down, and that's a highly unusual situation. And so I think right now we would chalk that up to the election bubble that's occurring in prices. Speaking of that, November VIX futures and the term structure have risen above October futures, indicating that traders are now expecting this post-election volatility to extend out into December. November VIX futures are based on December SPX options. So that's probably going to cause the market some consternation, but we'll see. I mean, just because there's a consensus that's going to happen doesn't really mean it's going to happen. So overall, SPX found some support around 3,200 and is now rallying, but it's still in a bearish trend and will be unless it closes above 34.25. So we're operating around that. Again, as I've always said, we trade both buy signals and sell signals, but only when they're confirmed. I invite you to visit our website. You can subscribe to this channel. That's the only thing you can join, I guess. You visit our website, take a look at our newsletters, and we do have another Saturday seminar coming up here in October on volatility trading. So thanks for listening, and good luck trading this week.